Hello and welcome to another brand new edition of the Upside Podcast. I am your host, Kristie, and today we have Dipendra Jain. Dipen is a 3 times exited founder. He has built and led companies across many countries in Asia and globally. His latest project is Brokk, a crypto infrastructure operating system designed for India, Middle East, and Southeast Asia. He's also an active angel investor and has invested in over 40 startups globally. Welcome, Dipen.
Thank you, Kristie. Pleasure to be here.
Yeah, so maybe we can just start off by talking about Brokk. What exactly is Brokk? How did it begin? What is the business model? Tell us all about it.
So Brokk started just by happenstance to a certain degree. About 4.5 years back, me and my co-founder Manu, we decided to start Farmway, which is essentially where we started acquiring a lot of farmland in Georgia to grow almond, saffron, and eucalyptus. Over a period of years, those amounts of farmlands that we were acquiring personally by our own capital grew to quite a large amount. While we were operating those farms and preparing to grow almonds, saffron, and eucalyptus, we started getting a lot of inbound interest in terms of people who we knew and second degree people who we knew through them who wanted to invest in the farms, and which they did. But
Mhm.
also, what we saw that we were seeing a lot of interest from a lot of financial institutions, the likes of BlackRock, not specifically them, but quite a lot of them who wanted to actually think about, how we could tokenize our real world assets and start operating on a token model as well. So that was an interesting insight. That's what, we sort of got that from a lot of people, and we started exploring that aspect.
Mm.
While doing so, we ended up speaking to three crypto exchanges, not
Mm.
going to name them. And while going through the process of figuring out how we can actually list the tokens, the fees structure was eye-wateringly crazy. And they were so expensive that we actually didn't really see the point of actually listing our tokens on those large exchanges, even though they have extremely deep distribution. So
These
that
were
sort of
these were listing fees, is it? To list
so,
the
so these
real.
were listing fees for the tokens, and there was the revenue share
Mm.
on the total token sales as well. And
Right.
this was something new for us as well. Right
Mm.
around that time, at the same time and happenstance, that we figured out and we kind of started to learn that the crypto laws in India are going to be changing. And we have a fair bit of insight from the policy teams sitting on ground, how that is going to turn out. Around when we got to know that, we said, listen, this is something awesome if India is going to start operating and changing their crypto laws, which is something which they have to be doing anytime
Mhm.
now. So we decided,
Sorry,
listen, let's
which
just
which
put
year was this? Sorry, backtrack. Which year was this?
this year,
Oh, just
beginning
this
of
year.
this year.
Oh,
Yeah.
okay,
So
okay.
this is all like all the insights, all the token aspects, all the
Mm.
idea about starting the exchange. This sort of actually happened beginning of this year. So this is January of 2025. Yes.
Mm.
So I mean, like, listen, if India is going to start regulating exchanges, that's a great thing. Those kind of laws are something which most countries should be looking out for. So we
Mm.
basically put our hat in the ring, and we sort of have a very clear path of being one of the significant licensed crypto players in India.
Mm.
Now, having said that, uh, at least for me, I don't come from a crypto background per se. But so listen, we'll figure it out as we go. Let's try and build an exchange for India, and we had a certain operating principles of how we wanted to build an exchange, why we wanted to build an exchange, for what typical users we wanted to build.
Mm.
So that's how it started. So we got our heads together, we assembled the team, we started hiring rapidly, we raised a certain amount of money, and we started building our exchange. So we started on this process officially, I would say, April of 2025 this year,
But
about
okay,
six.
backtrack. Because you wanted
Sure.
to do this in India, but you were saying that you had spoken with the other existing exchanges in the market, and those were, they were charging very high prices. But what's to stop the Indian exchange from also charging as exorbitant prices to you guys? You know.
That's why we started the exchange technically, because we don't have to pay ourselves to list our tokens. So uh, we wanted to be the exchange. We wanted to be the
Right. Yeah, yeah,
infrastructure
yeah.
for that, right? So, and barring the eye-watering fees, which were quoted by a lot of other players, international players, and they have their own business model. I'm sure they have logic in that, but that's something which we didn't see logical for us at that stage.
Yeah.
So we started building our exchange, and it's been what, like 5, 6 months down the line. We have built our exchange. We are ready to switch it on. But during that time, I mean, it's one of those typical entrepreneurs' dilemma that I want to do this, I want to do this, I want to do this. You want to do everything, and a lot of things started making sense while we delved into the whole crypto exchange piece. Uh, Three things sort of came out while we were doing this. So obviously, we wanted to build an exchange. We wanted to build a regulated crypto exchange. We wanted it to be an AI native exchange for India specifically. Uh, in- because it was India specifically, that's how we started. We didn't want to be limited by just one country, because these regulations can be positive when they
Uh-huh.
are playing in your favor, but regulations, as we've seen in certain countries, just change overnight. And
Mm.
as a business model, that's a fairly risky thing to operate, where you're regulated, great, but you don't want to be dependent only on just one particular jurisdiction.
Mm.
So we thought, let's expand our scope of building the exchange into multiple jurisdictions. So we decided to focus on MENA region, so the whole of UAE plus Turkey. We decided we wanted to build in most of the CIS countries minus Russia, and that's where we are. So we basically have started the process of getting licenses/approvals to operate in those countries. And during that whole process, we wanted to figure out a way to make the overall value prop of an exchange much more stronger.
Mm.
Yes, exchanges are different. There are multiple, plenty exchanges. I think, for example, me living in Singapore, I use multiple exchanges for various different products, depending on how I feel about it. For some products, I like the UI just to operate. For some other exchanges, the pricing is better, the products are different, how they
Mm.
interact with the user is different. So we wanted to sort of figure that out. So we said, listen, let's add a few more things, and then it should make logical sense in the long run for users to stay within our ecosystem. So we wanted to sort of pull back from just building an exchange and have a much more bigger ecosystem. So we decided to add two primary products and a third product, which I'll come to towards the end. The second product is an RWA tokenization platform, which is where we technically started our journey from. So we sort of, built that into the ecosystem, which is called Brokk Vault. The exchange is called Brokk. And we were seeing a lot of movement in the whole stablecoin payments system. So a lot of feedback we were getting from a lot of people who we have massive respect for in that area.
Mm.
So we wanted to solve for stablecoin cross-border remittances as well, but not just make cross-border remittances. We want to figure out a way to make stablecoin payments be able to make it at the merchant level. So, for example, if I'm using Brokk in the future, I would have a mechanics to use my local stablecoin, depending on which jurisdiction I'm operating in, and use that stablecoin to make payment all the way till the merchant level. So, for example, like a Payla of Singapore or a PayNow of Singapore, but backed through a stablecoin payment network. So those are the three products that we decided to put our hat in. And all of these three products build on each other. So individually, all of these three products are own different verticals to talk about. But if we build it all together into one, it becomes a very strong ecosystem in
Mm.
future. Not now, obviously, we haven't launched. And once that ecosystem gets built, the users end up having a lot more. They get a lot more value out of the whole suite of products that we are launching. So that's where we are. And the final product that we actually want to get to, just to make it our life extremely, extremely complicated, is to become a digital neobank. The idea around that is when we can actually do these three things really well, which will, a lot of people say that you need 5, 6 years to figure those out. Yeah, sure. That was probably 10 years back. So you need 5 years to find product market fit. These things move a lot more faster. So we aim to get to a space in about 18 months from today where we have a decent amount of product market fit, decent understanding of how our operating systems work as well. And then eventually have an access to a digital neobank where the moment we have that, we can actually have better unit economics for the overall business. We can have deeper liquidity. We can have much better market making capabilities for our exchange as well. And more importantly, our target segment, how we initially think about, are younger folks from 18 to, let's say, 30 years old. Now, these people, these users, eventually, over a period of time, everybody moves on, graduates to a different part of their life. And we want to be there with them, let's say 5 years down the line, where we have a strong digital neobank offering where we can actually provide them interesting products based on how they have been with us and not be just relying to a commercial bank, which sometimes works for a lot of people, sometimes doesn't work for a lot of people. So that's the overall ethos of Brokk.
Okay, taking a step back, right? Like there
Sure.
are already existing products and companies that are tackling each of the verticals that you mentioned,
Yeah.
from exchange to RWA, a real world asset tokenization, and then there's the payments aspect of it, which you're targeting merchants mainly, as you mentioned, and then the last one is kind of like neobank. Um, what's kind of the mindset behind wanting to do all four verticals, and do you feel like you're kind of biting off more than you can chew because it's already difficult enough to just focus on one, but you're trying to build all four.
So the
Yeah.
interesting thing is the infrastructure is fairly similar for the first three products, and it's actually sits on top of each other. So we are not planning to do all four together. We are planning in step by phases. So first, we want to get to the exchange. Immediately around that, we want to get the RWA tokenization. Which, by the way, yes, we hear that a lot of companies are doing. None of them really that well. Primary part of the reason is because they don't own their own assets, which is different in our case. We actually own our own assets. So what people actually do for RWA
Mm,
is people would actually raise, let's say, 10 million, 50 million, $100 million, then actually go and acquire those assets
mm,
and then tokenize that. In our case, it's completely flipped. We have been preparing mentally for 4 or 5 years, and we have that 5 year head start. So whenever we talk to regulators, the eyeballs sort of, grow, become wide. I'm like, oh, you already have that and it's already operating and you're already generating. There's a balance sheet around it. Yeah. And so that makes it a lot more easier that we actually own those assets,
mm,
unlike anybody else. So our liquidity for our assets is a lot more deeper than compared to us. People actually operate in a different way. Coming back to the RWA platform, none of the platforms seem to have any significant adoption yet. So that segment should change. Hopefully, we are the ones who can make a dent in that segment. Uh, for the stablecoin
why
payments,
why is that though? Is it a supply issue, or do you think it's still a fundamentally demand issue?
it's a s- uh, it's a mix of both, but I would say more of demand as well. And
Mm,
there's also an issue of discovery. I mean, a lot of people don't understand the asset class, and it's a fairly straightforward asset class to operate in. But just discovering, it's like, how you used to do flights 10 years back, 15 years back. People didn't, I mean, to go and actually go to a offline agent and find. So it's a discovery problem, which turns into a demand problem, I feel.
mm,
So I think if you can solve that, and that's where this hits into the whole ecosystem of having an exchange. Exchange by virtue will have millions and millions of users because
mm,
people like to trade on exchange. Now, if
mm,
you can build that exchange and actually cross-pollinate the users into different segments of product classes, which primary of that is RWA, it makes a lot of difference.
mm.
Should make a lot of difference. I mean,
Yeah,
at least that's what we are hoping for. So
right. Okay, sorry, you were mentioning something before that, and then so where are you guys now in this kind of in the development stage at this point? Because I guess there's a lot of you need to kind of apply for certain licenses, and you got to do them for all four categories as well, and you're also targeting several markets, which means you also need to work with license regimes in all of the jurisdictions. So do you have like a priority list? And where are you
So
on?
yeah, so we do have a priority list. We have a priority list of India, for sure. We have a priority list of UAE plus Turkey, and within the CIS region, we have Georgia. So all the requirements for that have been mapped out. All of the applications are already in process. Uh, and so I think we are good. And in this space, specifically, rightfully, you said, I mean, it's a very strong it's very difficult to get the licenses as well.
Mm.
Primarily because the capital requirements are fairly high. Two, it just takes time because the government is going to review everything. There's a strong AML, KYC, which everybody has to do on their end. So you're
Mm.
talking about anything between earliest 6 months to 18 months to get these licenses. In our case, we've already done that. So we've already applied for everything.
Mm.
So, and it's just a matter of getting those licenses. And from the requirements of any and all of these countries, all of the requirements we've actually crossed, uh, flying colors. So we're pretty happy with that. So just a question of a few more months, and we'll get a couple of licenses, and then we get going. In terms of where we are right now, exchange is ready to go. We can switch on our exchange tomorrow the moment we get any one license to start operating. We were hoping that to be India, but let's see. Only time will tell. Just whether it's going to be India, whether it's going to be UAE first, whether it's going to be Georgia first, whether it's going to be some other country. So depending on wherever we get our first license, we'll switch it on. For our RWA tokenization platform, that is already done as well. So in terms of the infrastructure build, in terms of the product build, in terms of liquidity, in terms of operations, everything is done. Now we're just waiting. Now, in the time we are waiting, we just basically, improving our product every day based on internal feedback, based on some better feedback, based on the feedback that we get from our advisors and investors. So yeah, so we're ready to go. Hopefully, when in the next few months we get our whatever license we do, it should be a serious contender in terms of user experience and the depth of liquidity that we provide.
How have the conversations been across these different markets, like you mentioned, India, UAE, Southeast Asia, any of them, or just these two?
Not Southeast Asia yet.
No, okay. So India and UAE as the top two jurisdictions that you've been talking to, right?
Yes, and we've just started talking to EU as well
Mm.
for our licenses for the whole of EU. Uh, Now, there's a mix of everything, and I need to be careful how I put this across.
Mm.
Uh, India has been slower to adapt to the market needs, if I can call that, in
Mm.
terms of how the population generally views crypto and how much they want to be involved in crypto and how much they want to invest in crypto. So I think there's a certain amount of inertia which has been there, but that is improving and it's improving fast. Uh, in terms of the regulators, extremely sharp, extremely aware of the nuances of the whole space. So it's very it's been a fun conversation in terms of how you don't have to explain the nuances of the product beyond a certain point.
Wait,
So
this is
that has been
India or UAE? India.
this is India. Uh,
Okay.
on a similar side, UAE has historically had very well defined regulated structure.
Mm.
So it's just a question of going down the list, and everybody just they just you get this docket of papers you have to follow everything by the T, and once you do, and it's just a straightforward process of applying for a license and then fulfilling the requirement from a technical infrastructure point of view, capital requirement point of view, the quality of people who they want to be running those offices and products, and that's it. And once you get that into the place, then it's a certain amount of time the regulators take. Now, obviously, because it is well structured, because it's a market which is extremely well versed with crypto and extremely accepting to crypto, especially UAE, uh, everybody wants to be there.
Mm.
Every conceivable exchange. any conceivable crypto project. Anything adjacent to crypto is always there,
Mm.
right? And they tend to be, I mean, I don't want to use the word headquartered, but the but the majority of the folks are there for that. So that sort of gives you a very well versed single location and an overview of the overall space and how it's evolving. In terms of CIS countries, they have their different challenges because just, I mean, it's the CIS countries economically, there's a different challenge which they have to go through and they're fighting for. So it tends to be not, it's not slower, but it's a more of, they're also learning as they are evolving.
Mm.
So they are learning from players as well, and they're deciding how to operate on that. So it's fairly new for them, and they're getting there. I think what happens is eventually a lot of jurisdictions, not just specifically in crypto space, like in banking as well, they tend to look over for US. Whatever US does and however structurally things are done, this sort of, adapted for their localized aspect. And this is exactly what has happened this year as well.
Mm.
Because of the Genius Act being solidified, everything just moved, in this space. And hopefully the Clarity Act should do the same as well soon.
Mm.
Actually, it should be done soon because the markets are pretty red. So hopefully that comes out sooner. So
Mm.
yeah, I mean, generally that's what I've seen. In terms of EU, we have just started interacting. They surprisingly, the EU structures are fairly straightforward as well. It's very well defined. They very well understand the aspects of what their population needs to be exposed to or not exposed to. They're much more stricter in terms of enforcing those enforcing some aspects of the regulation.
Mm.
But it's been a nice surprise to get to see the EU regulators as well.
But I guess you've also been having longer conversations with India and UAE, but just kind of comparing the both of them, and I'm sure there must have been a lot of kind of follow-up conversations. They have their own queries and documentation that you have to submit, and KYC processes that you need to submit to them as well. Do you see any kind of differences or variation between the way kind of India looks at crypto versus how the UAE looks at crypto based on the questions that they've been asking you? And how I'm sure there are a lot of other companies that are also going through the process, but it's interesting to kind of get into the minds of how regulators are looking at it and how they want to seek to position themselves in the market.
All right, so I'll have to phrase it so that I don't get myself into trouble. So uh, it's sort of a perception issue, right? UAE is extremely, extremely bullish on
Mm.
crypto,
Mm.
right? They're always happy. And primary, I mean, if you see with everything UAE, they're bullish on everything,
Mhm.
right? Which is a good thing because I see them as a Series C startup in a way, right? They just want to take time,
CDC startup.
like a
Oh,
Series C startup of nations, right? So
oh.
they're extremely uh, less risk averse, willing to take more risks. That sort of breeds a lot more innovation to happen. Things move a lot more faster in that scenario, which it does, and we all see that in UAE. So that's very very. I don't know what's the word for that. It's nice to be part of that mindset where, all right, let's do this, let's figure this out. You know,
Mm.
uh,
Mm.
India on the other side, it's a market where, and it's a nation which has to be slightly more careful. They are a lot more careful about how and what regulations should pass and what should be inked down. So they're a little bit more careful, and they sort of take a lot more uh, safer
Mm.
approach of a much more bigger nation, if I can call that. So
Mm.
there's a flip to that. It's basically like on one side you're talking to an entrepreneur in a particular country, and like, yeah, let's go this, let's figure this out quickly. Things move a lot more quicker. And then
Mm.
the other side you're talking to a big bank,
Mm.
which things are a lot more defined, but it just takes longer to move, and they are a lot more risk averse. So I think that's the difference. How I would define them. Hopefully, not getting myself into too much trouble for saying that.
You mentioned that you guys started off by acquiring farmland in Georgia, correct?
Yeah, the country.
Are you able to share like how much real estate you guys actually have? So I'm assuming there's a real estate when you talk about RWA tokenization, there's a real estate play, but you mentioned also a couple of like eucalyptus and almonds. So is there a commodities play to that as well? Um, yeah, if I mean, as much as you're able to share, exactly how much
Sure.
you're able to trade.
So we have close to about 4,000 plus hectares of land across Georgia.
Uh-huh.
We we are in the process of acquiring a lot more farmland right now because we basically have committed, and the government is sort of, uh, helping us out in getting the right farmland to grow these asset classes as well. So that's where we are, 4,000 plus of hectares of land where we grow primary almonds for now, and there's some saffron and eucalyptus is something which we just started, and we are going to make that into a bigger play. Uh, in the next couple of years, that amount of farmland that we actually, the real estate that we own would be significantly more, with a few
Mm.
multiples of 4,000 where we stand. Yeah, so that's the current state of it. I'm sorry, I lost on your second question on top of this. So
Oh, meaning there's the real estate play, but in terms of commodities, because if you're buying farmland, you technically can trade anything from wheat to soybeans to, depending on what your
yeah, so
product.
that is so that is the whole tokenization aspect of it. So it's not
Mm.
just tokenization of the real estate of farmland, but it's the tokenization of the real estate and also the yield that comes out of it. So anything that comes out of it, what is the asset class that we are operating on? So that is also going to be tokenized. So that is something which we are combining into. So both of those things are combined into one.
So how did you guys just raise money internally to buy this farmland, or are these shared by the shareholders of the company? And if you're looking to acquire more land, are you only looking to acquire in Georgia, or are you looking at other markets as well?
So initially it got started by the founders itself, where the founder capital was used to start acquiring the real estate of farms. So there were four of us who actually started on that. Two of us are primary running the operations, so that's me and Upmanyu. In terms of we have shareholders because eventually once we started doing it, a lot of friends and friends of friends who wanted to be involved in it as well. So they have also invested in acquiring more farmland. So we
Mm.
certainly are shareholders. And that's the same approach we are taking for our future projects as well. So we basically will keep acquiring initial shareholders, existing investors. Obviously, they are privy to what we are acquiring and they want to invest. They do.
Mm.
There are institutional partners as well who are getting involved in investments in those real world assets and the real estate of the farmland.
Mm.
We are also looking for other countries right now. So we're looking at Spain, we're looking at Sri Lanka, we're looking at India as well to start acquiring. But that is something which and US, Florida as well. So yeah, so that's where we are. So we're
Mm.
basically looking at a few other countries, but I feel in for good number of years, I think more than 95% of our operations will be Georgia only. We will acquire certain aspects of different farmlands in different regions, but that's where our moat is. That's where we want to stick to, and anything related to farm and yield, it takes almost 5 plus years to actually see anything come out of it. So
Oh, why, because you said it sounds like it's a strong likelihood that you're going to stick to Georgia, but why not, I guess, aggressively also kind of acquire land in other markets?
we might be able to acquire land aggressively in other markets, but in terms of operating it, I mean, there's only so much we can do, and we're already stretched out too thin. So I think the existing team can can do Georgia really well. So this is just my prediction, which is where we will be.
Oh, okay. And in terms of, I know it's still a little bit early when it comes to go to market, but I'm sure you guys must have already discussed this. But when you talk about customers, like are you focusing mainly on institutional investors, funds, traders, or are you looking more at like individual traders, individual investors? Like,
Fair.
or are you taking more like a narrow subset of these customers within those fields? How are you kind of sizing that market?
So it's different segments, user segments for most of the products. So for the RWA. We think initially we will be institutional first because that's where we have actually seen the most amount of interest so far. Once that actually gets going, then we would be able to focus on the retail users because it will take a long tail of confidence and trust to build for that. That will only be able to do once we actually do our exchange. And for exchange, we are focusing only for retail customers like yourself and me. So it's retail first on that segment. For RW, it's institutional first. When the retail first actually gets going, then we can actually get users to see the value of RWA. And for institutionals, obviously, I mean, they will always be interested in certain aspects of the business. But for us, for go-to-market, those are the two segments that we're focusing on for very different type of products.
Mm. And are you guys raising any money at the moment, or how were you
Yeah,
guys
so
managing, like, for the past year that you've been scaling the business?
Yeah, so it's been again individual founder money. We raised a reasonable amount of funds for from angels and advisors, people who actually have done similar stuff and know about how to operate in this space and vertical spaces.
Mm,
So we did that fairly large amount. We paused our funding exercise about 4 5 months back because we were sort of evaluating our own business because initially, like you said, we started just from an exchange which was TCX back then. So we're just kickstarting our proper fundraise now.
mm,
So we will be raising. We are raising right
mm.
now. So and hopefully, yeah, we should be able to close it by Q1.
And I mean, how is the response been towards from investors towards the product so far, and like how's the fundraising market these days for a product like yours, especially now?
So yeah, so far we've spoken to most of the tier one investors globally. The response has been interesting. We've been fairly decently well engaged with all of the investors. The conversation is still going. There is interest. There's strong interest because everybody who operates in fintech, they sort of understand that the power in this whole vertical comes from regulation and being
Mm,
licensed. Okay,
mm,
so once you can do that, then the product on top of that obviously needs to be world class in itself,
mm,
but the moat comes from regulation. And that is the moat that we wanted to operate in. And
mm.
that's where we feel we are the strongest in. So there's a very, very good amount of interest from all of the VCs that we've seen, most of them inbound as well. Uh, so yeah, I think it should be fine.
And are you able to share how much you're looking to raise, and what kind of investors do you want to raise for? Do you still want to raise from VCs, or maybe less so today?
I mean, we need to have institutional capital.
Mm,
So we are talking to VCs. We also want to sort of, focus on VCs who have been prior operators themselves.
mm,
So sort of, it becomes a little bit more easy to engage. You get a lot more value add from existing operators who have operated in similar or adjacent spaces. So that is the subset of VCs that we are targeting or mentally targeting for.
mm,
Uh, yeah. So, and I think I forgot to answer your previous question. How is the VC investment space looking these days? I
mm,
think uh, uh, I think this space is something which requires generally a fair bit amount of capital and a fair bit of category creation risk. So that risk actually generally comes from VCs who have actually seen that operating and done that themselves, and that generally tends to be from the valley. It just the virtue of how things operate. In
mm.
terms of Southeast Asia, I think I've seen a lot less willingness to do category creation so far.
Yeah, because I think we discussed this the last time we met as well back in
Right.
Singapore.
Yeah.
Just I mean, I don't know if you can speak for the rest of the ecosystem, which is also a lot of people. So, uh, I mean, do you think there are a lot of other people in? I mean, you've worked in Indonesia as well, in Singapore.
Yeah.
You talk to a lot of Indian founders. Do you think your views towards the VCs about VCs is similar across the board with other founders? Because I think after the market correction, I think there's been definitely a bit of shift in terms of, do I really need to raise VC money today? Maybe not, right? So,
I
Yeah.
think it's difficult. It takes a lot to raise. It's it sort of
Like
sidelines
now.
you from the actual.
Now.
I think even now more so, definitely in the last 2 years, and there are cycles that we all go through. It just takes a lot of toll, and you basically are you're spending a couple of quarters doing the
Mm.
fundraise process, and you're not actually building them. So
Yeah.
that's one aspect which I feel most of the founders share, because it takes their focus away, and it's a totally different mindset. It's a totally different skill set to be able to raise, right?
Mm.
Uh, do you need to raise depending on what you're doing? If you're building a SaaS product, to build the product, I don't think you need to raise that much now. I think definitely gone are the days where you need to raise about $20 million to find product market fit and hire 50 people to do that.
Mm.
You should be able to build anything right now under 10 people. It's not needed. It's generally just not needed. Even with every tool that we have in our disposal, AI or AI whitewash or whatever you might want to call it,
Mm.
it still moves you a lot more faster. Does it does it help you build infrastructure? Not yet, but it gets you to product market fit. At least you can figure out whether what you're trying to do makes sense or not. I think that is something which you don't need to raise funds from. And by virtue of that, if you have a smaller team
Mm.
and if you have to spend lesser dollars to find your users,
Yeah.
then you need to definitely raise less money, definitely may be able to delay taking venture funds. You can certainly delay that process, and you should. I think you should just focus on building the product and finding out whether you're doing something right, whether people actually want, or you should put the pipe down and do
Mm.
something else.
So how big is Brock's team at the moment, or how big do you envision the team to be? And given your previous experiences of building startups, of course, those happened at different times and different decades as well. And now we're also in a very different era where AI and agents have allowed us to be able to scale so much faster. You're also spending less capital, as you said. But how, if you could provide any, I don't know if you can illustrate any concrete examples in terms of, say, cash spend, time to monetize, time to scale, like how, in terms of your projections today, when you're building Brokk today, how differently are you looking at it today versus maybe some of your previous companies that you've done?
So, currently, to answer your first question, our team is roughly about 20 people right now
Mm.
for Brokk, which doesn't include the Farmway team. The Farmway team is about 90 people, which is totally separate. Out of those
Sorry,
20,
the founder team.
the Farmway team.
Oh, Farmway. Oh, okay, okay.
Yeah, that's a separate business line altogether, totally different thing. So we are roughly about 20 of us. We have a pretty large legal and compliance team, which is not ours. That is something which we are using uh, as our partners. Then we have an engineering team as well, which is close to about 15 to 16 people. And all of that we are slowly bringing them onto our own books
Mm.
very, very soon. So that's the size of the team right now. In terms of, I'm sorry, I have a bad habit of forgetting my chain of thought. So what was the second question you asked me? So
Uh, well, basically, kind of, I was wondering if you could illustrate, well, first of all, size of teams, but also time it takes, the kind of cost optimization that you're enjoying today as you're building Brokk with your current projections versus maybe some of the other startups that you
sure,
did before.
right.
The amount of cash spent, amount of even time taken to monetize and achieve product market fit and scale. I just wanted to provide a bit of comparison between previous companies and versus now. How much faster is it? How much
So
more
I
cost
can
is it also?
definitely. So I will only be able to compare my previous companies because they were very
Yeah.
different domains. It was not dependent on a regulated space per
Mm.
se. So I think the first company, we had more than about 50 people. 98% of them were engineers. To build a fairly straightforward, simple product, it took more than 7, 8 months to be able to be in a position where you can actually launch it to real users.
Mm.
To hire, it would take about anything between 2 months from the time you actually commit to commit to doing something new. So you're talking about 1 year to be able to see whether you have a product, some people want it, some people don't want it. And then on top of that, you'll figure out your monetization on top of that. So, and that would just take, usually it would take anything between 18 to 24 months. And that's the whole VC model of
Mm,
of the last 15 years, right? And that's
mm,
where the previous comment goes to, that you need 50 people plus, and roughly anything depending on the product, anything between 5 million to 20 million raised to find that product
mm,
market fit. Now, if it's a SaaS product, if it is not dependent on regulations, or if it's not dependent on actual physical operations, you should be able to do that in 2 months,
mm,
not more than that. It would be baffling to see if it takes more than that. And what I mean by 2 months, I mean to find your first users, to validate your products, to validate your idea, to understand what operations you internally need and what is not working, because nothing will work eventually. So you
mm,
need to figure that out as soon as possible. So that should not take more than 2 months, maybe 2.5, maybe 10 weeks on top of that. But this is only specific to products which are software first, software only, not dependent on external operations or regulators.
mm. I'm actually wondering, and I'm thinking kind of out loud as I say this as well, is, there's still so much dry powder that's left in the ecosystem that hasn't been deployed. I think there's been a slowdown in deployment, especially for
Yeah.
VCs. I'm wondering if a lot of founders like yourself may be in a position where maybe the VCs are very excited to deploy into a company like you, but the founder now is under pressure to take in more money than they actually need, because a lot of these VCs do need to let go of this capital. I don't know if this is a similar experience. Like, have you experienced it, or have you seen other companies experience this? Because you really don't need to raise that. You don't really need to raise that much
Yeah, you
these days.
don't at times to raise too much, but it takes a very strong person to say no to eight
Money.
figures, 7 to 8 figures. You need to be extremely strong to be able to say that aloud, think that aloud, and actually stick your guns to it. I think we've seen that in this area, in this region, for the last 5 6 years, right? The amount of funding people have raised and still haven't found any reasonable, what's the word for that? Any reasonable impact internally. The balance sheet looks like a complete mess. That's just shocking. And it's just like, really, you raised $50 million and you still haven't figured out what to do with it? Change something else. I mean, you can change your product, change the direction. It's perfectly, totally fine. But
Mm,
that's just baffling. In terms of the dry powder which is available, I think there's a lot, because this asset class is extremely exciting when done right by
mm,
right people. I mean, it does insane amount of returns. No other asset class can even come close to that. Uh, so I think there is dry powder, but I think depending on, there's everybody just has a thesis, every VC fund, and they just stick to it, and they stick
well,
to that
they
mandate very
try. I
strongly.
don't know. I guess someone who's more critical will say that none of them have a thesis, but that's not for me to
Oh,
say.
yes, unless there's a complete outlier, then the thesis goes out of the window at times, depending on the founder. But generally, most VCs tend to follow a thesis of a certain segment and sector they want to follow. And
Mm,
that always is based on a cycle, right?
yeah,
In Southeast Asia, everything is about shopping and last mile delivery,
yeah,
about ensuring that you are able to do e-commerce in a certain different way. This is what we've seen in the last 10 plus years, and
yeah,
including mobility. On the west side of the front, everything was SaaS. Everything was SaaS, and only. So there has to be a. I mean, I think there is a there. The whole VC model was about category creation. So I think people are just not betting, or have forgotten that this was all about category creation. So if a category doesn't create, and if a founder is trying to create a new category, let them figure it out. They will eventually. I mean, that's the whole statistical model you put in 2030. Eventually, one or two will figure it out really, really well. So I think that I see a fair bit of slowdown in that,
yeah.
which is a little unfortunate. I would say, but yeah, but uh, but about the fact that people end up taking more and are provided more than what they need, and people not being able to say no. I've heard some stories about it. Haven't happened to me yet. So
Yeah. Do you still invest in startups in Asia, or do you still see like
actively,
the deals still come by your desk and do you still look at
yeah.
them?
So
And
yeah,
where yeah.
sorry.
Oh, I was going to ask just basically like what have you how has the deal flow quality been like over the last year plus? I mean, there's a lot that's happened in the last 3 to 5 years, but maybe this year, yeah, maybe that first, and then I'll move on to follow up question.
Sure. So I actively invest in startups. I stupidly invest more than, I mean, like my whole portfolio is more than 65% in startups, early stage startups. That's how I've always operated. It's very scary, but it's a lot of fun to do that because I meet a lot of fun people who are solving batshit crazy problems. Uh, uh, I get to see close to about 10 to 12 deals once a week. I probably invest maybe one or two in maybe once a month or something. But a lot of interesting stuff does come. I just haven't been able to get myself to invest in similar type of products and the same SaaS products which are doing similar things. And you've seen that happen in so many cycles. Uh, Asia is somehow still trying to optimize shopping, most of it. I was like, come on, give it up. I mean, it's enough. Let's move on to something much more fun. Let's
Mm.
do something extremely crazy. So, which is a lot more lesser in this part of the world. I wish it could happen a lot more. Like um, some like completely batshit crazy stuff. Which doesn't come across that often in this part of the world, which is kind of unfortunate. But yeah, I mean, there's a lot happening. Uh, should happen a lot more in this part of the world.
Like when you say batshit crazy, like what kind of creativity and innovation have you maybe seen, or do you hope to see come out of our region?
I'll give you an example, and
Mm.
I'll answer this in a different way without taking names. So I was in the Valley couple of, I think this was last year, and I was at Stanford meeting a couple of professors, and I met this guy who was previously a founder of a multi-billion-dollar networks company, public company, and once the company went public, he got out, and I met him. We chatted for we were supposed to chat for 20 minutes or something. We ended up chatting for 3 hours. So he
Oh.
was solving a problem which was completely batshit crazy, and like I have never. I like, are you? I like, dude, no, stop smoking whatever you're smoking. This, I don't know if this works or not. This is the law of physics. This is difficult to operate from whatever little I know. So this guy was trying to solve for climate
Okay.
globally. Okay. And he explained to me how he did it, how he plans to do it. His example was that he's going to launch a satellite. The satellite's going to open up an umbrella, kind of a thing. And that would move based on the Earth's rotation and depending on where it wants, and it would just stop sun rays going down to that particular region, which could be as small as 10-kilometer radius or as big as 1,000-kilometer radius. And he's like, this is the only way we can do it. And I love it. I would love for you to solve for this. This is crazy. So that's what I mean, like batshit crazy. So the level of ambition at times is sometimes directly correlated to the people you're surrounded with or access to capital. So that is what I mean, that you don't get to see these kind of stuff, which is fun. And looks like he's apparently solving for it, and he's doing reasonably well. He's raised a pretty large funding
Did you
round.
actually
And
raise
yeah,
money on that idea?
I did as well. I mean, I was like, yeah,
Oh,
if you can solve for it, yeah, sure. Figure it out. I mean, not that you need money because you're a multi-billion-dollar exited founder, public founder, but sure, I'll put my hat in the ring. So, but, stuff like that. So, and it just so happens that at least in certain part of the world, especially in the valley and around the valley, out of 10 people you talk to, three are actually doing something which is like completely off. Like,
yeah.
okay, wow, okay. I mean, most likely it may work, may not work, but still, like, let's take the example of SpaceX,
Mm,
right? Do you
mm.
think you could be? in Asia and say, listen, I'm going to go to the Mars and I'm going to figure out a way. What do you think we will say? So like, dude, no, you're not. Don't 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 be stupid. Go get a job or something. So it just, the level of ambition, level of vision, and the acceptance level of what people are willing to do and get accepted around it. It's pretty fun.
Huh. Yeah. I mean, I don't know if the ambition level is still there in Asia today. Um,
I think it's also the cultural thing, right? I mean, because we have been a developing developing economy, it's just going to take a while to get to that level of ambition. Maybe in the next 10 years.
yeah. Um, hmm. Interesting. Yeah, I think the other question I wanted to ask, because I think I mentioned also, I was looking through at some of your LinkedIn posts. You mentioned you left a comment on one of the Lightspeed reports, the one that they just released this year, about the elusive kind of middle class myth that Southeast Asia has. I think it applies to most of emerging Asia. But I mean, just to kind of summarize what you said, but a lot of you said that a lot of founders tend to kind of focus on you either build for the top 10% or like the top 50%. And then this in between is kind of like a bit of an elusive middle class where their spending behavior may not necessarily be as clear cut as people think, right? I mean, you've built companies in Indonesia as well as Singapore. I mean, I don't know if you could share some of your own experiences, like when you talk about this elusive middle class, like what are you really talking about? Because as far as I know, like most of the VCs and startups were trying to tackle this kind of rising middle class in Southeast Asia, but at the same time, I think a lot of people also failed along the way.
Yeah, I mean, like most developing countries, you have the top 1 or 10%, depending on the region, which can actually spend
Mm,
disproportionately more than the bottom 20%. But that percentage of the population, and depending on the country you're looking at, is still not much. Like the top 10% of Indonesia is something where they can
mhm,
spend $2,500 roughly,
yeah,
plus minus a few dollars on discretionary categories like, let's say, health tech, travel, education. Yes, that's emerging. That's an emerging middle class, but that number is still fairly small. So
mm,
the propensity to pay doesn't exist because one, they can't. I mean, realistically. Two, culturally, you cannot change people to spend more than what they are used to, even if they can. Then the bottom, let's say the bottom 10% or 20% just don't have the money to spend. So
mhm,
yes, you can capture those users. Yes, you can have millions and millions of users who are using, but they don't have the way to pay. So your unit economics for a product or a company which has growth capital in it, you will be
mm,
able to grow users, but you will not be able to grow your bottom line or even top line to that matter.
mm,
You'll just
mm,
add on to more users. Your users may increase, but nothing will move. So I think the interesting bit, this is the barbell, right? So you have both sides of the spectrum.
mhm,
But
mhm,
in countries like Indonesia is the wobbly middle ground, the middle class, which actually has problems which they want to solve for. They're willing to pay for things which can make their life easier, but in a not so expensive way. Right. So
mm,
that's why when you look at Indonesia, yeah, Gojek and Grab works really well. I'm sure I don't have the numbers for that, but majority of the people still use the actual Gojek, the Ojek, because the propensity to pay is a lot lesser.
mhm,
Yeah, the top 10% would be able to take a cab there and all. But I think it's figuring out how you address and what user segment you want to work with and not hope that the propensity to pay will change in 5 years. That never happens. Which country has happened
mhm,
where the propensity to pay for a subset of a population changes that
mhm,
quickly? Not really. I mean, I don't know. I mean, I haven't seen it so much. But having built businesses there, like one of the last companies I did there, which was an online medical diagnostic startup for Indonesia, which was, I mean, I grew up in Indonesia, so I know how the medical system works there. I mean, the hospitals look great, but there's a certain lack of quality and focus on the actual outcome of diagnosis. So we wanted to fix for that. And
mhm,
my process was, I simplistically thought about it at that time and it sort of worked. I wasn't targeting the whole population because our product was expensive. We kept it very expensive because we wanted to provide very, very extremely good care and provide the right diagnosis from the best doctors globally. So we targeted the top 1% of the top 1% of the top 4 cities of Indonesia. That was still a fairly good amount of people. Those were the people who used to come to Singapore. So you're talking about Jakarta, Tangerang, Surabaya, Medan. Uh, and these are the people who would, when they wanted to get the right medical care, they would fly down to Singapore. So this is flying down to Singapore, staying in Singapore, even for one night, you're talking about $1,000 plus of back and forth. We just wanted to get them to the right doctors, in front of the right doctors who they could talk to, get the right diagnosis, get the medicines delivered to them. So just targeted the top 1% of the top 4 cities, period. And we were very happy with that. Didn't have to raise external capital. Our unit economics was strong. We were fairly profitable from month number third. We targeted them in a very simple way. Everybody complains about finding the right doctors. There's enough amount of expats. Everybody who I knew used to complain about doctors realistically and rightfully so. So we just got connected to people through WhatsApp, period. Didn't have to spend crazy amount of money to acquire users. It was a fairly cheap way to acquire users. Just WhatsApp communities of, Kristie knows 10 people. Somebody asked Kristie, listen, I need to find the right doctor. Instead of that, listen, just try this out. You spend, let's say, a couple of tens or twenties of dollars to get get an appointment done over a call or video, and that's it. Because also, we were not targeting to solve for everything. We were trying to solve for only for anything which we could solve for by giving over-the-counter medication. Because for that, the regulations are a lot more lighter. Surprisingly, 85% of medical challenges that we as a society feel can be fixed by 14 medicines, which are all over the counter, which is you have 3 classes of antibiotics, simple, which we all know the names of. You have different types of Panadols with different mixes. You have a couple of cough syrup. That's it. That's 85% of medical issues that a population goes through, which is flu, cough, cold, pain, period. So you're just targeting that. Like, I don't want to deal with anything else. And around for those things, we built a very strong AI model which could self-diagnose. So if the system could self-diagnose, you don't need to pay for it at all. You just order the medication. There you go. If our AI systems failed more than 3%, and then this is funny to talk about, like this is 2016, where AI models didn't exist. People didn't know what the failure rates, error rates are. And at that time, it was just for us, for me, it was just a simple math. Like, listen, you're dealing with people's lives. Hopefully, we want to make it better. Let's keep it randomly 3% or 3.5%. If the system fails more than that, connect them to a doctor straight away. There was no brilliant mathematical model behind it, although I can do that as well if required in retrospect. But it was just simple and it worked. It just worked, and people were fairly happy about it. And that was a very successful business. Now, when I think about it, shouldn't have sold it.
Oh, but you sold it. Why? Why shouldn't you have sold it? I mean,
Why shouldn't I sold it? This was my third startup. I was extremely exhausted. I saw a number which was provided, and I was like, okay, this number is not bad. Everybody gets an exit out of it, and then I can move away from running a startup and move to Singapore. And yeah, that was part of the reason. And I was like, yeah, I'm just tired. I just don't want to do a startup again. And the number seemed reasonably good to me. And yeah, that's what I did. But in retrospect, now I think about it, yeah, I shouldn't have. If I could have kept at it, this would be a $1 billion plus company by now. So
well,
hopefully,
yeah. Well, now you've moved on to start your hopefully next $1 billion company.
I don't know. Time will tell. Hopefully.
Okay. Maybe just last question around just 2026. Apart from, obviously, I guess you guys are pending some approvals from UAE and India, but I think just bigger picture in terms of certain expectations, like hopes, or maybe even particular developments or trends that you're following that you think 2026 you're going to see more of. I think first on the crypto side of things, crypto blockchain side of things, and the second part on the AI startup building side of things. Where are we heading?
I think on the crypto side, I think crypto will become more mainstream. Like every bank globally in the world will have a crypto offering.
Hmm.
Fairly certain of that. Most of the banks, not every bank, most of the banks will have a crypto offering. It will become much more mainstream. I think we will find some other use case for crypto, which is going to be much more stronger use case than just crypto and trading. I think the whole sector, there's an underlying question which we I also asked. I'm like, okay, so this is great, but there has to be a brilliant use of this technology, which is an extremely complex technology. So I think in the whole crypto space, I'm hoping there's a use case which comes out, which just becomes simple for everybody to understand, and globally for every market to sort of sit on top of it, and crypto becomes much more mainstream. For AI, I think consolidation. A lot of companies are going to just stop existing. I
Hmm.
think it's going to, from the way it looks like, I think it's going to be the same three companies which are going to own the top of the funnel, which is a good and a bad thing in its own
Hmm.
way. Yeah. And there's another third one on AI. I think by the mid of 2026, I think building software will become obsolete. It's just
Hmm.
going to become table stakes. Everybody will know.
Hmm. Why
Everybody
so
will know.
specific mid 2026?
It just the speed of how execution, the velocity of product delivery in this space is baffling. It just takes. I mean, this is moving too fast. I mean, as a startup founder, you want things to move fast, but this is a little too much because you can't just keep. It's like, okay, every week something new comes up, which is
Hmm.
elliptically more. So I think because of that, 6 months in AI space is equivalent to like 3 years, 3 to 4 years of regular software development. So that's why I think in the next 6 7 months, everybody who doesn't even understand software will be able to make a software which is a lot more stronger, but actually works on probably infrastructure level and can actually generate a reasonable amount of income and commercials around it. So I think that should be uh, that should become it's the same equivalent of let's say, for example, how we moved from, let's say, watching movies on videotapes and
Hmm.
cinemas. 2008, YouTube came, and YouTube was like, oh, all right, who's going to watch YouTube? I thought, "Oh, everybody does watch YouTube." And then TikTok came, and like, who the hell is going to watch 15-second videos? There's a long tail. So I think the same similar stuff is going to happen through AI, that people will actually build a lot more software for
Yeah.
their own personal use case for maybe 3 4 people. And that whole long tail of software will become very similar to how videos are and how we consume content. So I think the same shift should or most likely may happen.
Yeah. I mean, you also wrote recently about kind of the distribution playbook and how that even that is shifting for builders like yourself and
Yeah.
startup builders. I mean, do you think? I mean, this has been kind of shared by especially those in the AI space. Especially in the last year, 2025, a lot of people have spoken about it. But I mean, I don't know in Asia or among some of your peers. Do you think have you are people aware or cognizant of this particular shift, or how do you think things should be kind of approached today when it comes to building? Because obviously it's a very different way of looking at the world given the way that we're kind of moving towards the speed at which we're proceeding you know
Yeah. No, I think the whole playbook is changing a little too fast for people who have already built existing companies which are operating. I think they definitely have the mind space to think about how to operate and how to redistribute and figure out the distribution in the next coming year. For
Hmm.
people who are building it now, I think a lot of people miss because they're so busy building. The initial inertia of getting things out of the door and in front of users is such a long haul. And it's like walking through glass and eating glass at the same time. So people forget to think about distribution at times. But I think for the ones who can actually just spend some time thinking about it and figuring out a way to actually get yourself embedded into the whole thinking layer of how things are operating right now to get the right distribution, I think you'll eventually be there. It's the same SEO that started almost decades back.
Yeah.
That model works now, but it doesn't really. It's an expensive model. It does work, but it's not going to work for a while. After a while, so I think just getting yourself into the thinking layer of how agents are interacting, how agents are fighting each other and interacting with each other. I think that's the distribution shift, which is extremely important to think about. Uh, I don't know how to do it either, because it's still new. Uh, I think there are people who are actually actively working on it, and there are aspects to that which we can all work and implement even now. And I think we should just do that. I think it's don't miss out on that boat, because the moment, like 6 months down the line, things are going to look very different. So
Okay. I kind of
does that
assume.
answer?
Yeah. I guess, yeah, to a certain extent. Yeah, yeah, it does.
I tried my
Um,
best.
Maybe just one last question before I let you go. I mean, I think this year also we're beginning to see a couple of exits, at least potential IPOs and exits happen in Asia. There seems to be a bit more optimism into, as you move into 2026, more listings, hopefully more M&As as well. I mean, how are you feeling in terms of the exit market for Southeast Asia, Asia as a whole? Of course, there's also some concern that if the US markets correct next year, there's going to be more delays again, which will not be very good. But yeah, just wanted to get your reading on the market.
No, I think Asia has done really well,
Yeah.
especially the last 2 months have been the insane
Mhm.
amount of companies going public. So there's definitely a lot more dry powder
Yeah.
available for that needs to be redeployed. Hopefully, I mean, rightfully sure, there's a certain chunk of it would be redeployed. In terms of exit markets in the Southeast Asia market and Asian markets, barring India, I think I don't think too much of activity for the next year. 2026. I don't know if uh, any more companies are going to go public, at least not that I know of. But yeah, like you said, I mean, if the US market corrects, which most likely it would, looks like it, there's high probability of it. If it does, yeah, then things will get pushed by another 2 years for sure.
Ugh.
Not good. Not good. Hopefully not. Hopefully America finds a new, smarter, interesting, newer way to figure that out, how to fix it. So they usually do. So
Yeah. Well, then we can have another conversation on that. All right. Thank you so much for joining us today.
my pleasure.
Yeah. Thank you for joining us, and we'll see you again very, very soon.
Thank you, Kristie. See ya.